important is this rollback in regulations that the president has been so focused on?
I think it could be potentially important, but the message I think we need to deliver is it's also got to be balanced. So we have to recognize that the financial system, particularly banks, are much better capitalized now than they were before. We don't want to lose that advantage. So I like what I'm hearing Randy Quarles, who's the new vice chairman for supervision and regulation at the Fed, talk about. He wants regulation to continue to be effective, but to also have it be more efficient. And I like that. I really do like that balanced approach.
Well, it seems to me that we're moving into a period where it's going to be like Nirvana for the financial services industry. You've got a rollback in regulations. You've got higher interest rates. That's going to help net margins. And you've got a better economy, better backdrop.
Well, you're absolutely right. Those three things are going to be helpful to financial services. But I also say be careful what you wish for. So in the regulation, back to the point of being balanced,
yes,
things such as making sure that products and services are in the best interest of clients, I think is really an important national policy that we should not let go of. Maintaining the right amount of capital, absolutely the right policy, we should not let go of that. And so we have to be prudent in balancing rollback with recognition that, indeed, the financial services firms maybe didn't have enough regulation that led up to the crisis.
Oh, yeah.
And so let's be really thoughtful and not just do a wholesale rollback.
And once again, the pendulum moves faster than actual reality. Let me ask you, while we talk about the rollback in regulations in one area of the economy, I've been saying this a lot, Roger, and I wonder if you agree. I feel like the regulatory environment is going to get bigger on technology. Now, I know you're on the board of Google, parent Alphabet. Are you expecting the regulatory bite to become more severe as it relates to technology? Let's face it, these companies are different companies than they were 10 years ago. They know everything about us, and they have an incredible amount of power.
So, look, I do expect over time, and we've seen this already around the world, regulators are becoming much more interested in the newer sectors as they have been in the legacy sectors. And so I would imagine technology, healthcare continues to be one of those areas, communications continues to be heavily regulated. And so we are going to be in a world in which anything that is large and influential is going to draw the attention of regulators.
Yeah, and then when the law of large numbers, when you're a large company like Microsoft back in the 80s, they were in the crosshairs. Now other large companies, like a Google, is in the crosshairs.
I think the most important thing for the management of these companies to do is to spend the time educating regulators on what it is that they do, how it works, and frankly also listening to the regulatory interests, because regulators are reflective of a broad national interest that also has to be taken on board. And so I think the place to start is good, open, transparent communication. These large companies in the tech world, in my assessment, are not to be feared. They are to be understood first and foremost. They are great creators of jobs. They're creators of wealth. They're creators of democratization. And so one is to be careful not to undercut the things they bring to the table.
What is your sense of the policies we've seen coming out of Washington so far? As a businessman, as someone who's overseeing $1.25 trillion in assets under management at TIAA, what do you say about new tax legislation, first time in 30 years? You've got an infrastructure plan that's on the way, and I know you've got an infrastructure paper coming out of your firm that's on the way. You've also got, obviously, the thoughts on trade and a big issue this week about the president's new tariffs on aluminum and steel. How's he doing?
Well, what you see, taking those in reverse order, the potential tariffs on aluminum and steel have clearly created a lot of controversy. They've awakened our allies in Europe that are threatening to put reciprocal trade barriers up on some of our major exports. And so here I think the president has to move very circumspectly. My observation is that there are folks around him who understand this very well, so I suspect there's going to be quite a bit of dialogue in the White House around exactly how to proceed.
I think the deadline is in April for aluminum and steel. We'll see if he sticks to these tariffs.
Right. So
it could be he's playing poker. Right?
I don't know the president at all.
Right.
I would say he's known for the art of the deal.
Yes, exactly.
I think to some degree he may be looking at this as an opportunity to deliver on some of his promises in some of those states that matter to him,
right,
the Pennsylvanias, et cetera. And so I'd say the jury's out on that, given the amount of news coverage on both sides around whether or not these tariffs are a good idea.
What about the tax law, new tax law?
Right. I think the new tax law is very interesting for a couple of reasons. One is the size of the tax cuts at a time when the economy is already doing very well. This is a bit of an experiment to have this much fiscal stimulus just as the economy continues to do quite well. Normally, this kind of stimulus is used for when the economy is not doing so well. Secondly, I think most people would say it's a tax cut that's clearly going to help corporations, which is a net positive. Hopefully turns into jobs, investments, et cetera.
Roger, it is good to see you. Thank you so much for spending the time. Roger Ferguson is the CEO and president of TIAA.